Thursday, I always screw up the date. Wednesday, the 23rd of October, middle of the week. Really important highlight. I could talk about, we had the lows, we're right in here, not necessarily the lows called, but after it slid up through 92, which is around the open, it was a long side play for a while. Anytime you get a powerful move, it was a head fake lower to come up higher. This pattern in here created a be careful trying to short it for a while, because when you get a jump like this, it surprises a lot of shorts and they get stuck. A lot of stuck shorts mean a lot of buyers. A lot of buyers mean upside's the right side. Then I think the most important example and lesson of all to call this 4-point sell-off from 96.50, 96.75 in here was at 9:30 Central after crude oil. Crude oil had their inventory number, and we analyzed it by saying if there's a draw, it's a bigger surprise and upside in crude oil. Now, crude oil, if you don't know this, you'll know this by listening to our videos on YouTube. Crude oil will have the same influence on the S&Ps and on stocks directionally, especially when oil moves fast. So I'll bring in a chart of crude oil. At 9:30 on Wednesdays, they have their inventory number. Never mind all the greens and reds. That's this big jump that we had right here. This big jump right in here was a bullish inventory print. Less supply than they expect. I'm not going to get into analyzing or trying to get into the why the report did what it did, but it rallied. Right in here, this is the most important thing you could ever learn. When something doesn't happen when it should. Now, the S&Ps followed it up on this first leg right in here in oil. Then they chop around, and keep an eye on the upper right. Bam, you see that pop? They popped them from like 54.95, 20 cents or so, 15 cents to 55.12. Bam, one sweep. And I said, hey, the S&P should go up on that. And then 5 seconds later, I said, but they're not. Be careful long. And that was right in here. They didn't even hesitate to go up. They didn't even go up. They just stuck at 96.75, 96.5. And then the market fell off the cliff. It should have went up with that big 15, 20 cent spike in oil. And because it followed it up on the first leg up, and that second one, it just stopped. And that was a be careful long moment. If you're bearish, get short moment, because the divergence and the breakdown between a relationship that now shows you what should happen isn't. And when something should happen and it doesn't is always going to be your best clue, no matter what business you're in. Especially trying to predict the movement of price. If you're a poker player, if you're a salesperson, if you're a husband or a wife, the best clue, a detective, the best clues will always be when something should happen, but it doesn't. Your job is to put yourself in a position to recognize that around every turn, to put yourself around people who could recognize that, because that is not a coincidence. That has to be trading 101. And you know what? It isn't trading 101, and it never will be. Because all people who try to trade never realize that they could be in front of the best tools ever, but if they're not managing themselves, how the hell are they going to manage their risk? They won't. Subscribe to this YouTube channel as I do these videos, and put some thumbs up. And if you don't like it and you put a thumbs down, I will find you. Unless you truly didn't like it, that's fine. But if you did it, be a hater, I'll find you.